Okay, traders, welcome to this live intraday strategy webinar. Today's Thursday, April 5th. Michael Boutros here with you this morning. DJ, we got Christopher in the house. All three Pete's are here. Ruth, Iman, Jaya, great to see everyone in the room. So, welcome to this non-farm payroll release. NFPs are on tap tomorrow. Obviously, look, we're expecting a pretty strong number. We got a pretty strong release on ADP. We're looking for a print of 185,000. Last month, we blew out at 313, don't forget. So with the strong ADP that we got on Thursday, we could see a pretty decent read tomorrow on NFPs. Unemployment is expected to downtick to 4% from 4.1%. So on whole, as we've continued to suggest, guys, the Fed basically sees the labor markets at full employment. So close attention to, as always, two critical things: labor force participation. Okay, as you see that slide, it'll put artificial downward pressure on the unemployment rate. With the same respect, if you see that uptick, okay, and we still get the downtick in unemployment, that's a very strong factor. Okay, that would actually suggest that there's overheating in the labor market. So it's going to be all about the labor force participation as well as wage inflation, okay, or wage growth, and how much we're seeing that start to uptick as inflation becomes still center stage for the Fed. So heading into tomorrow are suspicions that we're going to see the dollar break higher, poised for further gains. We've been saying that for a couple of days now. We've finally got a break of the weekly opening range to the upside today. Setups will be following, obviously, DXY into tomorrow's non-farm payroll report. Aussie, okay, Aussie yen, dollar Swiss, Euro CAD coming in some support here, Sterling CAD coming in some support here. All these setups that were highlighted last night. Also, don't forget tomorrow for NFPs, we also get the simultaneous release of CAD employment at 8:30. So dollar CAD will definitely be on the menu today as we come into that double event risk tomorrow. And we'll circle back to euro dollar, sterling dollar, breaking the weekly opening range to the downside. Euro coming in some support here. And obviously the SPX support held. We broke through near-term resistance. We were talking about that yesterday at 26.45. That break essentially suggests that we have a little bit more of a relief rally to go in broader risk. So lots of stuff to discuss as always. Feel free to throw out any questions or trade setups you want to review at any time. Eman, great to see you as well. Good morning. Okay, so DXY. I mean, here's what we were looking at for the DXY on the weekly charts, okay? Nothing changes. 91.33 is the long-term bearish invalidation. How do we look to play this? Looking at this objectively. Look at the momentum signature coming into a resistance trigger here. Obviously, nothing matters until the weekly close. Price action, 91.33, last year's low week close, comes in right above that slope, the 50 line. Okay, so you're talking somewhere between 91 and 91.33. That 30 pip range on the weekly chart is what needs to hold as resistance heading into tomorrow. Pooja says, hey, Mike, could you please begin with Euro Oz AM? Sure. Okay, let me circle back to Euro Oz right after this, okay? Euro Oz, I got you. So 91.33, 91 is major resistance on an advance tomorrow. Let's say the decent number comes out, you get a spike. Look for a reaction there. I'd actually be looking for a fade opportunity if price does poke into this region. If we close the week above this, okay, and price action on the momentum signature closes above that resistance trigger, that suggests we got a pretty important low in place, at least for the near-term front, and you'd look for an extension higher. Not the favorite scenario. Right now, we're still looking higher into this region, looking for exhaustion. Daily chart looks like this. Okay, keep in mind, last month's open comes in at 91. Pretty close to those highs that we made on that late swing there in February. Again, 91.01 comes in, swing lows from last year. That slope that we're talking about, that blue slope on the weekly charts, okay, and pretty decent pivot in price. So exhaustion to one of these two targets, 91, 91.33 would be the ideal play if we are heading lower in DXY. And let me just see what this parallel looks like. It's going to take us way higher, but let me see. Actually, it's pretty decent on touches there. All right. Irrespective, 91, 33, 91. Look for that advance here on the DXY. Looking at this also from the intraday standpoint, again, we were talking about how this just looks bullish from the start. There was really nothing on the pullback. We kept on getting support ahead of 50 or 40 rather on the RSI signature. Here's the final break of the weekly opening range, 90.45. Again, 90.67 would be a soft target. That region into 90.90, 91. Pretty decent. Swing highs, 38.2 retracement. You have slope for this near-term parallel that we've been following off the lows here. A little bit of a lag, sorry about that. But levels are pretty clear, okay? On a rip tomorrow, this is where he wants to look for exhaustion. As far as the break back below 90.21, that was, a decent weekly open. There's been a decent pivot in price. Wouldn't get too excited, okay? We just broke channel resistance, so I do think there's a little bit more upside here before it fizzles out, but ultimately, an advance into one of these two levels is kind of what we want to target on this dollar advance. Any questions on the DXY? Let me take a look here for Pooja because she's in this trade on Euro Aussie. What's your position here now? Could you please begin with Euro Aussie, please? I'm short from 159.75 this morning. I need to rush in 5 minutes. Okay, so Pooja on this trade, obviously I haven't been following this too closely, but bear with me. Okay, I'm not sure what type of position you're looking for in a longer term or not. Week on the daily chart, pretty decent pivot somewhere near 58.15, 58.20 would be the longer term play on this. I love the turn. I love the turn into resistance. In fact, Euro Aussie is something that we've been following on the weekly charts, and it's pretty impressive. Big region, 100% extension, 786 retracement. We did peak close just above it, but the momentum signature has been rock solid divergence, right, on every subsequent high. So look, you see this median line right here that we've been following off these lows, touch, acceleration, okay? That median line comes in basically at the low we just made this week. 59 handle. So that's sort of where you want to see acceleration to the downside on the break. But from all points of view here, you could get a rebound, but below 60.17, I'd still be looking lower. You're short from 59.75. It's low leverage and a wide stop at 60.10. Is that correct? Yeah, 60.10. Yeah, I mean, if you're willing to hold it, that's sort of 58, 15, 58.20 would be an ideal play. Let me take a look at the near-term pictures one more time. Hold on. Throw over, pull back. Let's see here. What can we get from this puppy? Okay, here's my problem with getting too comfortable in a position from your entry. It's decent for an intraday position, I think, Pooja, but the problem is some pretty strong divergence here into this low. It's a pretty strong divergence closer to 50 on a lower low in price. I wouldn't jump out of the position, but I don't think a positioning from down here into this play would be the hold. The thing is, if you're comfortable with this thing ripping back to the weekly open or back to these swing highs, then pulling back, that's okay. But on a move like that, you would get stopped out in the position that you're holding right now. So from the longer term approach, at least a 4-hour chart, just a risk to be noteful of. Let's get deeper here. Hold on one sec. Like all indications on this chart, Pooja, I want to see a drop into this zone. But how we get there might be kind of just, It might not be as orderly, let's say that. 100% extension that we've been following at 60.17, just above your stop. That's what concerns me. So if you're okay, pulling your stop off a little bit, never want to encourage people to do that, but that's where the real risk would be on the trade. Also, you have the weekly open right here, converging on the upper parallel 100% extension. The only thing that concerns me again is just the momentum is starting to fizzle out. So break even if you want. If you don't want to take that risk, break it even on the stop. And if you get into 60.20, again, look for re-entry. But Puja, on this decline, this would be a decent area of support. You'd start to look for, that's where the risk for a larger recovery would be. Let's see if there's any near-term levels on the way down that could interrupt that. Huh. Watch 58.75. But this is still the big zone. You see the pivot here? Resistance, 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 break, acceleration on both sides, resistance in that zone again, push, and it all converges on the median line. So does that offer some clarity on this one? I could open the stop if needed, but I am going to be away from the screen for the US session. AM traveling. I hear you. I hear you. Well, those are the risks. If you're okay opening it up, above 60, 60, 20, 60, 18, let me just harden that conviction level. Again, we don't know that this is a low, but just because you're traveling there, 38.2 comes up there. Yeah, I would stay bearish below 60.20. That's, again, just my humble opinion on this one. But the momentum signature does suggest you're a little bit at a risk for a recoil higher towards that resistance, at least before you start to move off. Even if you take the slope just off of this week's high, kind of converges on that same region. No, our initial slope was better. Okay, thanks for putting a partial limit at 158.80 as well. Right on. The importance of that region, I think I just hit on mute for a second there, guys. Am I back? Sorry about that. We've been looking at this weekly chart for forever, right? So 76.30, 76.12. If we break down again this near-term support right here, I'd still be looking for a drop into that. The weekly chart is super clear on this on the Aussie. It's still a major area of support. I can't ban, what's the word I want to use? I can't rule out another test and another drop into the zone before we start to turn off, but the levels are clear. Okay, we've been talking about 77.50 on a weekly close basis would clear the way for the advance. 76.12, I'll show you that in a daily chart in a moment. Into 76.36, this region here is where your critical support region is, and obviously a weekly close below that, and Aussie's in big trouble. Not our favorite scenario, but the possibility there is there if we do break lower. Here's Aussie on the daily chart. Okay, so we came into the week looking for, a possible drop into one of these two regions. Here's the turn higher. We tested resistance on the near-term slope pull back, and we're testing near-term support. I'll show you in a moment, but The start of the month is there, the start of the quarter is there. I wouldn't put it past this thing if the dollar rips, the index rips to that level we talked about, for this thing to jackknife back into this level before moving higher. So I'm still approaching this. As much as I like this trade, as much as we've been waiting for this turn, respecting, again, that we're trying to call a reversal here is very, very difficult thing. So you have to tread lightly on this position. That being said, 76.12 to 76.36 is still your critical support level in Aussie dollar. That's the daily chart, right? Intraday looks like this. We threw this near-term slope on yesterday. I kind of warned you guys that I'm not too keen on working with it too strongly yet because it's really early in the advance, right? But guess where this advance fizzled out yesterday? Right at the 50 line again. So you got a second tag of the 50 line. Look where we just pulled back. Support again at the lower parallel. So it looks like, again, as all things held constant right now, looks pretty good. Yesterday, our near-term bullish invalidation level was 76.79, if I'm not mistaken. 76.79. Okay, that's our focus is higher, well above that region. We just came into it. Long entry against this position here on the low had been 76.60. We're basically looking for a rebound higher. Again, super nimble, right? Super nimble. Everything looks good as far as momentum is concerned, pretty decent on the bounce there. While above this, we're still in this slope. If we were to break below this, you go neutral because you're basically, again, looking for 76.30 and 76.12 as areas of which this thing could find a little bit more of a major support. So this is the sort of line in the sand for me right here, okay? If the U.S. market's open, this thing turns over, heads back below this low, basically puts the emphasis on the dollar push higher tomorrow to get this thing into 76.30 or 76.12. Pretty simple setup. The levels are clear. It's all about whether price needs to make this low first or not. On this advance right here, you want to be very nimble, okay? Peel some off as we get towards 77. I wouldn't really get too hardened on this region here. It's a confluence region, which I do like, but we've already sailed through it a couple times. The 100% extension off the low, 50% retracement off the high. So, peel some off there, but you're basically looking for 77.30 on the 618. So it's make or break here, near term, I think. Longer picture, bigger picture into the close of the week, we got to start to see a little bit more of a drive off 76.36 here to get this thing going. All right, so again, the favored play specifically if dollar comes off, that would obviously help us here on the upside, but near term, look at 76.79. Okay, that's the March close, by the way. I'm not sure what's up with my charts this morning. None of the text seems to be showing up. It's weird. But March close, perfect touch there. Would you take trade here after waiting for an hour or so into the U.S. Open? Dagon, yeah. Yep. Already have small position on it. So if we get the play, we get the play in the extension higher. But I don't want to get too aggressive on it because, again, we're trying to call the turn. It's a very difficult thing to do. You want to approach it with a lot of respect. Okay, but if we're going to bounce near term, this is the spot. The same respect, if we're going to break down near term, this is the spot. Yeah, tight stops. I mean, depends where your entry is, Dagon. If you're already a little bit higher or you're looking for here, I would just play it, against the lows here a little bit. If you got the ideal entry on the pullback into 76.79, literally, I think that was the low. 76.78 was the low. You know what I'm saying? If you got it from there, then you want to keep the stop against this low. 20 pip stop there should be decent. Also taking a look at this at the onset, as we made it into that low this morning, divergence, right? Price action, lower low, lower low, lower low, the oscillator making a series of higher lows. So there's a decent trigger to the upside. You want to be super nimble on this. Ultimately, like I said, Dagon, I think heading into tomorrow, the risk is for the washout still into 76.30 or 76.12. It's just because the dollar is so poised for strength. We're expecting a strong number, which could tame the upside if we do get a strong number. But if it's blowout and the dollar just rips for a little bit, we're basically at support. If it cracks this, I'm not going to go chasing the short per se. If you get a decent play, maybe. If you get a decent entry and a stop on a swing high, but you're basically looking for 76.30 or 76.12 to offer that bigger low. Make sense? He says, yep, got it. All right, cool. Right on, Dagon. Okay, so that's Aussie dollar. One of my favorite positions heading into tomorrow. We did Euro Aussie number 2, Aussie dollar number 3, Aussie yen. Let's stick with the Aussies. Is number 4. So here's what Aussie yen looked like yesterday. Something that you might want to take a look at, kind of just if you want to try to avoid or stand clear of direct dollar exposure heading into the NFP report. But this thing is coming into a pivot resistance here, and the close of the week is going to be really important for Aussie yen. Not gonna lie to you, I got stopped out on this yesterday. I thought we were actually gonna get a little bit more of a pullback off 82.15. It started to pull back ahead of the US close, but then it just ripped right through. So it was a tight stop, ripped right through. 82.50 was the next level. Here's the pullback. It already played out into 82.15 as support, so that one's done for that short. But the picture here certainly starts to turn a little bit more constructive if it breaks 82.58 on the upside here. You got the former swing highs from late March. You have a 50% retracement. Longer term, it's the 236 retracement of the decline off the yearly high, and slope resistance. This is a beautiful pitchfork that we've been following in Aussie yen off the yearly highs. Do you see how many months we've held this pitchfork? So, a sliding parallel extending off the high that we made here in late January. We just missed it up here. It's basically all converging on this messy area right here. So break below 82.50, and I do think you get an extended rally towards the 83 handle. Still, I'd be looking for a possibility of an exhaustion there. But, the emphasis is on this to really see how it reacts at these resistance levels. Remember, Aussie yen broke a big support. Here's Aussie yen on the weekly charts. Okay. We broke a big pivot level down here. We're poking through. Here's the median line. This is the median line off the 2017 early high and this year's January high. You can see the median line's been pretty decent on the pivot. It's resistance right here. If we close the week above this thing could find a lot more stretch on the upside. Okay, you had a decent divergence trigger right into that low. This price action made a lower low. The oscillator did not confirm that low. So the emphasis is on this upside move. We said yesterday, I even put out a piece on Daily FX here. They said yesterday that basically either the risk is higher, but you're looking for a reaction off 82.50 or 83. So this initial pullback here, it doesn't scream, wash out to me just yet. Again, on that high, divergence was registered yet again on the 2-hour. Price action making a higher high. The oscillator not making a higher high, not confirming that high in price. So right now, the initial focus is 82, 82.50. Okay, this region right here. Sorry, I think I'm lagging up again. There we go. So, I'm flat here at this point. If it gets back into 82.50 and it rips, I'm not going to go chasing it. Do you offer any guidance during the report tomorrow? Ruth will be putting it on SB Squawk, the actual levels that they come out. Actually, tomorrow, Ruth, I'll be covering it live over on Daily Effects. That's a free session. You're more than welcome, guys, to join in. I'll be covering that with my colleague, Christopher Vecchio. So we'll be going over the data release, giving you the numbers live as it comes back. Then tomorrow, I also do have the Foundations of Technical Analysis webinar, sort of just educational type of webinar, which you guys know, I've seen you there before. So, yeah, I'm sure Jamie will be tweeting on SB Squawk as well. Wait for the reaction to pan out. The better play historically, I don't want to say historically, but in my experience, the better play for the NFP report has been to watch the reaction and either fade it or wait for the pullback to get back in and play the extension. Pre-positioning ahead of it is pretty difficult. If you're in a position, again, I wouldn't wash out, but I would definitely bring in my stops, bring in my readjust your levels as far as your limits are concerned as well. And just prepare for volatility. And it's been a pretty volatile week in stocks and broader risk markets. So for that to start to filter in on either a miss or a really strong print tomorrow on NFPs, could see that start to filter into FX a little bit more. Dollar's been pretty reserved, all things considering, the 600-point swings we've been seeing in risk markets. So for Aussie yen, the focus is on this range here. If we break back below 82.15, look for a larger pullback. Really don't know how to play this at this point. For me, it's going to be all about if we clear 82.33, if we clear 82.50, 83 is kind of being the level that I'm looking for. It's a little bit more of an exhaustion play. Looking at this from the daily chart, just to put things in perspective, the broader picture still looks bearish below 83.30, which is why if we get the rip into 83, I'd be looking for resistance again. Former channel resistance, a parallel, was perfect support. Perfect support. A little bit of a breakthrough on both sides there, but we got the pivot nonetheless. That converges on the 618 retracement of this decline. Just higher, those former swing lows converge on slope resistance. This is a parallel of this pitchfork, right? So it's the same slope. So on a daily basis, even a rip into 83.30 would still keep me bearish. I mean, it's my bearish inval. If that gives out, then 84.50, even into 85 is on the table again. But the focus is on this correction higher, okay? And whether it fizzles out here or whether it fizzles out closer to 83. So levels unchanged for Aussie yen. Any questions on these? We're just in this range right here. All right, next on tap, dollar Swiss, number 5. So here's what Swissy looks like. The extension did come into resistance. We were looking at that yesterday. It was just ahead of 96.13. We were just, 10 pips off or so, but that was the level of resistance that we were looking for on the upside. Clear break of the weekly opening range. Focus stays higher above the March high day close. So I still have 95.63 as my near-term support level on this one. If you're holding longs, I know yesterday we spiked right through it, but it still is going to be the level I'm looking for. Converges on slope. It's the March high day close, decent level. Bullish inval is your objective. Weekly opening range low, that converges on Friday's swing low. You're basically looking at 95.24, 95.25. So basically, on any pullback, that's sort of the key level that you need to see hold as support for this thing to remain constructive. Swissy, all things held, all things considered, looks like this on the weekly charts. Nothing on the weekly chart screams watch out here as far as the upside's concerned. The weekly chart suggests basically you still have more room for advance into 96.80 or so. But you do have that gap. It's a filled gap, but nonetheless, that's been resistance basically here today. Okay, so just keeping that in mind. Key support still 94.40. That hasn't changed. Still the major pivot that we came into the year looking at, and it's been still a pretty significant pivot in price. Okay, so the long-term picture for Swissy, major key support still 94.40. Major key resistance, weekly resistance into 96.80, 97 almost. So Swissy on the daily chart looks like this. Okay, a couple things that we're looking at here. You do have the 50 line. It hasn't been the cleanest, so I'm not going to stress this, but just higher here. Okay, again, 96.60, 96.50s. You have the 200-day moving average. Okay, decent pivot in price. Intraday, and again, this looks pretty constructive, right? Breaking above 60 here. Nothing really bearish about this just yet. Topside break of this slope that we were following since the start of the year. Came back, tested as support, moved higher. So all things considering, again, it's pretty clean setup. Here's what the chart looks like now on the intraday. And here's what we looked like yesterday again. So nothing changes, still constructive near term above 95.63. I think you get a little bit of a pullback here. Looking at the momentum signature since the start, or since I woke up, it looks very tired. So if you're holding longs, bring your stop up to that last swing low. You're still looking for the extension to 200-day moving average. That would be pretty sweet if you get the tag 96.56, 96.55. But ultimately, if we do get the pullback, the risk is still for a pullback all the way to the median line. So broadly speaking, still going to stick with the same levels though. Bullish invalidation has to be objective at the weekly opening range low, the weekly open, and Friday's low, all clusters right here. Okay, so keeping in theme with dollar long, this has kind of been manifesting it pretty well. If we get a pullback from here, and the dollar is still heading into that 91 region on DXY, you'd look to reassert this, looking for the tag of 96.55. 97.13 is what comes up as the bigger level. Or even into 97. Pretty big. Are you going to look at pound CAD? You betcha. I had Euro CAD and pound CAD up on tap. You want me to do pound CAD first? Let's jump into that. It's number 6. So pound CAD looks like this from last night. We were looking for the final drop. This thing was pretty freaking clean. Okay, this level that we turned at 183.54 was super duper clean. We got a really strong weekly reversal off that. We were looking at the support trigger. This is what we need to see close into the close of the week here to really get the conviction on a turn in momentum. But on the drop, I still think there's room on the broader drop into this support zone. Near term though, it is look like it's fizzling out because we're coming to a near term support. So again, the daily chart continues to suggest that there's room to the downside. We broke basic slope support off the yearly low, keeps the focus lower, right? Intraday though, it was all about 79.35 here. The 1618 extension of the decline off the highs converged on this lower parallel. Again, we have no merit to this except that it's just a basic parallel of the highs, and it converges on that 1618. Lo and behold, here's the near-term pattern that we've been following for the last few weeks. The 50 line converges right there as well. So look for support there, look for a reaction there. Could get a stronger rebound, but your basic premise heading into last night's trade session was bearish below 81.05 is your bearish inval. So we've since dropped into support and rebounded off. Here's pound CAD on the weekly chart. Again, no change to any of those levels. Pound CAD on the daily. Okay, and here's the intraday. So we're checking that level right now, see how we react into the US Open. The lower parallel is still there. If you're holding shorts on this, I'd definitely be taking some off the table. If you want to leave a fraction of the trade on, that's your prerogative, but just note that I wouldn't necessarily call it divergence per se, but you're definitely seeing a weakening momentum signature here. You're checking pretty strong support. So, if we break below these levels, right on point, 78.50, 77.83 are your next downside targets. That takes you down to this range. Okay. Near-term resistance, like I said last night, it actually turned out to be perfect. Resistance was right at the median line. Okay. And here's the slide lower, checking this region. So again, look for resistance here. Near-term, bigger level would be here. Bearish invalidation, unfortunately, still need to stay at 81.05. I wouldn't duck out on this if this thing rips into parallel resistance. Still kind of, I don't think you get up there, but that's still where I have to leave bearish inval. And if we take this slope, I showed you this yesterday, and take it back to this high, the whole region looks riddled with it. So on a break, I would want to look for entries again here, 80.25 or so. Ultimately, if this thing breaks to this level, there is plenty of downside. And remember, guys, a downside break of a descending pattern or descending channel, those are typically the sharpest parts of the decline. So certainly a risk on just a drop from here would probably see these targets in a pretty quick time span. Okay. Peter, any specific questions here on pound CAD? This looks, in my opinion, again, this looks actually ripe for a near-term rally or near-term bounce off this. But you'd want to be nimble. You're definitely playing against the weekly trend, against the monthly trend. On pound CAD, but levels are pretty clean. No change to any of these levels from yesterday. We just dropped into here. Could get a pullback into 80.25, but still bearish below 81. Ruth, we got both of those on tap too. Bear with me. I know we're good on time. We're gonna hit all the dollar crosses for sure ahead of tomorrow. So that's pound CAD number 6. Number 7. Let's circle back real quick to Euro CAD. That's another one that we covered yesterday. Also in one that's coming into some support. Weekly chart showed a little bit more room to 56.40 on the downside before you come into major support. There it is again, 38.2 retracement of the yearly range. You also have a very clean median line, which is right there as well. So I do think you can get a little pause or a little tired here on the downside as it heads towards 56.44. But again, downside break of a descending formation would be the same type of play that you're looking at here with pound CAD. So heading into tomorrow, obviously the CAD data is going to be the player here for Euro CAD on whether we break this low or not. But 55.30, 54.86 are your next downside targets on the break. For all intents and purposes, you're still bearish below the weekly opening range highs. Here's Euro CAD now. Okay, we're just sitting at that support. So our caution for not trying to chase this any lower from here, think well warranted. Again, this is just basic slope, guys. Zoom this out a little bit. 120-minute chart. Here's the basic parallel off the highs, extended off the lows. A little messy, right? But still continues to highlight this range of support. Divergence in momentum. Okay, it's there. Lower lows. So if we're gonna rebound, sure, could get it off this region. Once you start to assert a little bit more of a low here, just tack on a quick. I'll show you what it would look like. Too early to work with this. See if that 236 comes in interesting. Yeah, with those former swing lows. Okay. So on the rebound, boom, boom. Maybe look for reentry. But this is a big level. A pivot low below this. You'd look to sell rallies while below 56.45, looking for essentially 55.30 and 54.86. Big pivot in price right here. So very similar to what we're looking at with pound CAD. Dagon says a nice parallel in between the two red ones. Yeah, you like that, right? Pretty decent. Yeah. If we do rebound, watch where this slope converges on one of these retracements. Forget this. No, I would keep that whole range. Watch where the slope converges on this retracement. Right here highlights this zone right now if we do get the bounce. But yeah, well, I mean, watch 56.40. It's big. It's big, at least on a near-term front. Okay. Questions on any of the CAD crosses? I think we got over all of them except dollar CAD. Let's jump into that, and then we'll hit euro and pound, Ruth, for sure. So here's dollar CAD. Obviously, tomorrow, NFPs, CAD data, double whammy. Dollar CAD's coming off huge resistance on the weekly charts. We've been following this major pivot off of 31.32, the 618 retracement of last year's range. You had slope resistance here again. Very similar parallels, right? Right off the lows, extending off the highs. Huge region. This is big support. And the emphasis is on whether we do clear this on a weekly close basis below this region. You're basically looking at like 27.25s into the 27 handle. You have the 200 long-term, 200 week moving average. Okay. And right now we're basically trying to break through the 52-week moving average, which is in line with that 2012 trendline slope, which we've been following. Every pivot on either side of this has led to some decent run. Right? Here we are. So if we clear this on a weekly close basis, I think we're looking pretty good for a move lower. So this is one of those ones where just to go to what we were saying earlier, you don't want to take a carte blanche sort of expression on specific currency. Obviously, dollar's been moving higher, right? Dollar CAD has not been having a good week. Here's the daily charts that we've been following. Finally breaking below this monthly opening range lows for March. We were looking at 27.90, we were looking at 28. That's immediate resistance here. But again, the implications of this possibly being the head and shoulders break, guys, again, leaves room for a much steeper decline. So objectively, I want the daily close to stay below 28.28. Again, that is last month's open, was that pivot that we came off of, 2012 trendline resistance, same thing. Okay, I want to see intraday swings basically stay below there. Just a beautiful reversal overall, right? Divergence, trigger break, move lower. This is the crack. Look for a move down towards 27.20s. 27 handles the next big region. Former swing highs, 50% retracement, 100-day moving average. Okay. It can be if you need it, Christopher. He says he's the abomination on tap today. It can be if you need it, my friend. We're obviously doing well on the swing side there, so I really would hesitate to get you guys involved in anything intraday since we're holding the swing trade still. But yeah, we'll take a look in a moment. So as far as dollar CAD's concerned, here's the intraday. Okay, and here's what we've been tracking for dollar CAD. Okay, so we adjusted some of these levels yesterday. Once we got that break, we were looking to stay bearish below the median line. We got a rebound right shy of the median line. Perfect. Pullback came right into the 1618 extension that we had marked up. This is from the decline off the highs, 2752. That decline came on mounting RSI divergence, higher high, higher low rather, higher low, series of lower lows. And again, same exact setup. Near-term resistance at the median line. Bearish invalidation, I'd still be pretty objective of that and leave it at the weekly open. Weekly open resistance should definitely cap any advance here if you're going to move lower. But slope support, Fibonacci support, divergence, if it's going to bounce, this would be a decent area to play it or to see the rebound. I wouldn't even want to play it, to be honest with you. I'm looking for repositioning on the short side here. I'm not looking to get, not looking to play the rebound in dollar CAD. Okay, of the positions that we're looking for, this is the only one that actually favors dollar weakness straight up. So if we get a rebound back to the median line, look for resistance. If we do get this rebound, by the way, tack on a quick retracement of the immediate weekly range should offer some interesting levels. It's too early again to do this because we don't have the reversal conviction yet, but just as a drill, see that the 50% retracement further highlights that swing high, further highlights the median line there. And the 618 will come in just below the weekly open. That'd be weekly opening range low right there with the 618. Right, so one of these levels, I know that Jamie's looking at, I think, 2850 if I'm not mistaken. Or Jamie's looking for the 28 entry to get in. I think we just got it. He's got a 28.52 stop. So yeah, if it breaks through that 28.45, I'm right on with him then. We're right on level. So he's looking above that swing high. Yeah, this is where you want to find resistance. Pretty decent setup right there. Ultimately, a downside break should see acceleration towards 126.85. More importantly, 126.30. Any questions on dollar CAD? Again, the double whammy possibility here tomorrow with the inflation, with the labor report from Canada at the same time as NFPs, those can get us some pretty decent plays on these guys. So keep an eye on this one. Definitely something I'll be watching very closely tomorrow. Any questions on dollar CAD? Okay, let's move on to the dollar majors here. So Ruth, here it comes. This is for you. So number 9, here's euro. And here's what we were looking at with euro earlier in the week. So downside, looking for 22.40, 22.28. I still think that's a near-term major sort of support zone that I'm looking for reaction. Let's just jump right into the live charts. No hanky-panky. Here it is. We just came right into it right now. So sterling has actually made a little bit more of a break of the weekly opening range. It's since pulling back here a little bit. I'm kind of still hesitant on this. I still do think you need to correct lower ultimately before we get into a decent long position. But euro, this is a pivot I think we need to respect. Below here, 21.67 is the only other level that I have that is significant. And 21.67 comes up on the weekly chart is pretty pretty big. All right. Um, basic slope off the lows here from Q2, start of Q2 last year. We're checking that right now. Okay. 50% retracement. This is from the decline off the highs we made in 2014. That's 2167, and that break would invalidate the break for the February range lows, and that would open up a larger decline in euro. Don't know if we get it. I'm right now focusing on 2240, which we just clipped. Could get a little bounce off that. If we break lower, 2167, that's my line in the sand. That's my line in the sand. And that would sort of make more sense, guys, with the possibility of the DXY breaking higher towards 91. So the momentum signature on the weekly charts, very precarious here. Very precarious. Look at the weekly close heading into tomorrow. We do get the material break below this 3-point touch trigger. Objectively, that puts the momentum in a little bit more of a bearish stance. If intraday price spikes into this region like we did here, we close higher on this session, this might actually look like a clear-cut rebound off that slope, which is why it's really important that we recognize how to read these momentum signatures. Nothing matters until the close of that candle pins that signature. So something we'll be looking at into the close tomorrow. Daily chart. Here's what the daily chart on the euro looks like. 2228 comes into the 618 extension from the decline off the highs. Okay. Obviously, the swing low that we made late last month comes in at 2240, which is the level that we were talking about. Again, basic slope, both off the November lows of last year, but also off of those lows that we looked at in the daily chart. Both of those slopes are identical and converge on that same region. Okay, here's 2167 with the March objective range lows and that pivot that we made in early January, mid-January. So make or break, right? Make or break. I could see a scenario again where tomorrow you get that stab lower in 26.7, but if we close above 22.40, still want to look for a rebound higher. If we close below, the risk is for a drop near 2092, 2075 would be the next downside target. 2075 is 100 off the high. So even if it is correctionary, that would be your first objective sort of look. And that converges on basic slope support, right? Parallel off the highs, really nice. So longer term objective levels on the daily chart for euro. Any questions? The implications of this consolidation that we're making here on this break certainly open up the possibility for a larger decline. For me, ultimately, I'm looking to see the weekly close here. If we spike in 2167 would be beautiful. If we materially close below that, 2090, 2075 would be your next objective support level. Intraday. Here's what this puppy looks like. So there's the spike. There's really not much to say here. What do you do? There's the spike. On a rebound play, you know what I'm saying? It could be a decent sort of just rebound off support. Wouldn't get too aggressive on it. I was looking at this at I don't remember if it was 60 or 30 earlier today. And I was just playing with some trend lines here, but you know what I mean? I didn't take it back that far. Or even just off this low. Right? Continues to highlight 2228, 2240, 3040, we'll call it, is 10 pip range. So huge pivot in price. Okay, this 100 is off of the previous high that we made. I just kept it on there because it was literally clipped the low. So opened up this 10 pip range, and that's exactly where we are right now. Just slap that line. There's the November trend line slope. So we're making divergence on this low, right? Price action made a lower low. The oscillator made a higher low. If we're going to get a rebound again, this is where you might get it. I wouldn't be surprised if this thing kind of drifts higher and if Ps are on tap tomorrow, you get that market lull as we head into Asia tonight ahead of these major event risks for the US. So watch for a pivot off 2230. At the end of the day, this is my line in the sand near term. If we do spill lower, 2167, ultimately a topside break of this basic weekly slope. I think you look for a larger play higher in euro. Again, expectations is that tomorrow you move lower on NFPs. Question is, does that low fade? And that makes you a good buying opportunity to rebound? Or do you get the material weekly close below and really start to suggest there's a bigger shift here? No surprise, right, with where DXY is. No surprise. And sterling. So here's sterling. We talked about this earlier in the week as well. Here's what the update looked like as this thing was just carving out a very clear-cut weekly opening range right between some levels that we were watching, 140.84 on the upside, 140.20 on the downside. Ultimately, we're still constructive on this trade. Near term, this break does suggest you look for a lower, move lower. 39.77, 39.14, both levels of which we were talking about earlier in the week for entries. It's been tough getting really comfortable with the pound, to be honest with you. It looks like on the 120, so no change to any of the levels, but daily chart here, if we close at these levels, it wouldn't be a high day reversal close, but the actual, it wouldn't be an outside reversal close because the highs are actually equal rather. It is evil also, to be honest with you, but the outside or the reversal candle does have a bearish tone to it if we break these lows. So look, 39.30 would be the play for looking for a little bit firmer of a resumption. We got the trigger break in momentum. We're trying to make it through the weekly opening range right now. I still think the risk is for a spill lower before this thing ultimately corrects. Or I guess I should say before it resumes on the upside. That's a nice confluence region there. The 1618 extension off the high, 618 retracement off the low converges right on the lower parallel here. It's like 39. 39.14. 39.10. Ruth, any specific questions here on pound or euro? I think euro is a little bit more interesting for me because I don't really know how to attack this on this break. If it does materially break below the weekly open, this is what we're testing right here, basically at this point. But all things considered, all things held constant into the open of the U.S. trade session, yeah, I think it would sink lower. How do you look to play that? The next objective swing high isn't even until like 140.70, so you're already 60 pips off that, 50 pips off that. Can't chase it to the downside. Broader trend is up. You're playing the correction, so I think this one's where you track the decline, look for entries on a move towards 39.77. Ultimately, I do think you get deeper towards 39.30. Ruth, does that help? Any specific questions on this? Okay. So that's pound, guys, heading into NFPs tomorrow. Last but not least, here's, well, let me take this one for, Chris, was that you? Abomination? Here's dollar yen. So listen, near term, I do have some resistance coming up at 107.20, just a bit higher maybe. You got that slope. Remember we added this slope here for last week. We were still kind of hesitant on working too strongly with it, but though we did sail through it, we did get that final pivot in the 38.2 hold there. Here's the push higher. This retracement becomes null and void. This retracement here. And I just want to see what this extension looks like. So remember, if you're holding trades position here based on the swing setup, you don't want to do anything, okay? Our target's 107.90. Our stop is brought up to above break even at 105.95. Leave that there, okay? Intraday, guys, or if you're not holding that swing position, you're looking for re-entries, I would just caution you on near-term resistance right here. Again, that slope, convergence on the 786 retracement. I do want to see where this 618 comes in. Yeah, when the 618. So yeah, this is something just to watch near term right here. Kickback, look for 106.65 for support. It's been a pretty decent pivot in price. Extension higher, 107.50. This is huge. It's not reflected as significantly here on the intraday chart, but keep that in mind. Keep that level in mind. Some former swing lows, former swing highs, 618 extension off the high, converge all in the upper parallel here over the next few days. So I do think you get the extension higher. Again, 107.90 is a decent trigger. I have 107.83 just ahead of that, guys. That's actually the low day close from last year. So just an objective level right ahead of Jamie's target that you might want to consider as well. But all things held constant, this thing looks pretty good. You're testing a near-term resistance range between 107.13 and 107.20, 7 pip range here, backed very closely by the upper parallel. So no re-entries on atypical long exposure here, guys. You're chasing, period. If you're looking for something near term, if you see a spike and a sort of failure here, I think you get a decent pullback, but ultimately I think you buy that pullback too. Ultimately, I do want to see two targets for me of technical significance, at least from the daily chart. Still going to be at 107.50 level, but 107.83, 107.84. Last year's low day close was a perfect pivot on the advance into late February. That's where we just shot down from. And that converges now on the upper parallel. Okay, so 107.45, 107.50, decent pivot, 107.84, huge in dollar yen. Questions, comments, concerns? Looks like an objective break of the weekly opening range. You look for that late week high. Obviously, a big reactor to U.S. data, guys. We always tend to say that on the dollar yen. You know, as far as the correlation with Treasury, we've been looking at the TNX 10-year yields for quite some time. Note that has continued still to pull off from the 291 level that we've been talking about for weeks and weeks and weeks. Weekly close below this just keeps the emphasis on the pullback, at least near term, that we're seeing. And remember, guys, as this pullback, that means investors are rushing into the relative safety of treasuries, right? Okay, so dollar yen was number 11, made good time today, and SPX number 12. Here's what I wanted to go. Here's SPOOs. So we've been talking about this also for a while. This huge region, 2586, and we talked about specifically the yearly lows, which didn't really converge on, but you had that long-term, okay, 52-week, basically yearly moving average. You saw this clip right into it earlier this week. Huge levels for the SPX, okay? And this weekly close is going to be important. We talked about 2586 as the line in the sand for the weekly chart. If that invalidates, 2450, right, is your next downside target. Daily looks like this. All right. Now, much more precarious because the 2586 level did see a close below it right here on the second of the month. But even the spike lows, which we'll see in a moment in the near-term chart, have been pretty clean. Looking at this from the intraday chart or the daily chart, also noting a couple of key aspects that you just want to take note of when you're seeing these near-term breaches of resistance. A, price action making a lower low on the close, the oscillator making a higher low on the close, both reference points above 30, pretty decent signal. B, looks like today you're looking for or attempting a breach of this near-term resistance trigger. It's only a 2-point touch, so don't go crazy, but further offers more evidence, right, to the setup. See, it looks like it's a break of the objective weekly opening, monthly opening range rather, right? Here's your monthly open. We broke through and closed above the monthly open yesterday, and it looks like it's pushing through. So near term, here's what the chart looked like, and here's what SPOOs look like on our last updates, which I can't remember where that was. Boom. Okay, it's the same slope we've been talking about for so long. 25.86. Now we straddled it. Boy, did we test it. We straddled it. Look where the low came in. We talked about this specifically, guys, right here in the webinar early in the week. Right at the median line. Boom. Straddled this. We talked about 26.17 yesterday, and 26.45 was our near-term bearish inval. Here's the breach. Push higher. Okay. Think you see a little bit of pullback into the US trade session, maybe even 26.30s. Even if it gets in 26.17 on intraday, you know, the objective outlook here, at least from this advance, does look like you see this thing move higher. And just to give you some color for the near-term targets. Oops. Hmm. 764 already overlaps on this key region of resistance we were watching, so I'll keep that off for now. Okay. You bring up near-term bullish inval for the breakout here to basically that same key support region at 25.86. 26.66, 26.67, this 10 pip region, just watch. You have former swing highs, a 50% retrace and a 1618 off the advance. So could give you a little kickback here early in the session. If we spike higher into this region, look for the pullback. Ultimately, you just snap the levels for you here real quick. Ultimately, ideally, you find some near-term support along that parallel, along former parallel resistance, and then you break higher. Whoops. Okay. Pretty clear levels here on the SPX. Any questions? Okay, wow, I'm over on time as always. If that's it, we'll go ahead and wrap it up here, guys. Best of luck trading tomorrow. Again, I'll see you on Daily Effects on the free webinars there for the foundation session as well as the release tomorrow. Expect that overnight Asia lull to start to come into play, okay, ahead of NFPs. And remember, the print's expected to be pretty decent, so it's really going to depend on the deviation off that. And we'll try to keep you updated as much as we can. Till then, best of luck, and we will see you tomorrow. Cheers.